Hey everyone, and welcome to the final videos of V3. Today we are going to be covering multiple pairs and tying everything together. Please watch this video over and over because this will be the final and last video, as the PDF should cover everything, and so should the original videos that explain everything we're looking for. Anytime you get stuck, remember to always come back to this video. This will be a little bit of a longer video, but we will be explaining everything fully in depth. So stay tuned, and I hope you guys enjoy. All right. So we will be tying everything together and looking at how we could have entered the marketplace this week on shorts and buys, and what we would look for just overall coming into this week on EU and other pairs that we took. So, all right, we want to start on the higher time frame and just keep it very simple. Now we can see where this took a form of engineered liquidity. Now I will be going very in depth because I know there will be questions, which is inevitable, but when I say why something happens, I'll explain it. So notice how price trades up, takes its low, but then it takes its high. That is because this high never took a previous high, never took a form of liquidity. So when it trades up and comes down, this is actually now the new form of liquidity on an internal level, and this is now the strong high before creating the new strong low. So here we do have this entire order block because it's the last up candle before the down move. So this is a POI that will what? It'll get hit, unwind it, and then price will go higher. Now, why will price go higher? Simply because external liquidity is above here. We are still within this range. Price is simply just going to pull back to this area or this area, right? Has to generate liquidity, has to mitigate, and in order to go higher. Now, all we need to do is keep it simple and dictate the area, which is going to be this order block. Okay, price trades in, comes down, you have a very large area. Now, we're going to jump to the smaller time frame because we do have our area of interest, but we also need to dictate the move that went up. Here on the weekly, we do have a high and a low. Why is this a high and a low and not this, right? This is not a high or a low because it never traded above a new high and it never established a low. Now, it did mitigate that this is a low, right? Now, why is this low? Because the whole move traded a new high above this high. Low, high, low, failed to make a high, so this can't be a new low because it failed to make a high. So this will now be the form of liquidity, okay? So we'll go to the daily. Also, it's that move right here set up this inducement. Why is it an inducement? Because it mitigated the breaker right here. And it came in for that imbalance. Large move up. Now, yes, you could have took the move. Yes, it was a nice buy, but it's leading. This is the inducement leading up because a lot of people are buying when there's no buy here that's present at all. We're just trending down until we can sweep. This is a form of liquidity. Now, we will, again, of course, hit the order block, unwind, and correct this. But again, right, just a scout buy. Ultimately, we'll look for the rundown. Okay, so going into the daily, I do want to come back to this area. And now we can see, again, this would have been that form of internal liquidity right here. And then it would have came here. Why? Form of mitigation we were coming low, or they mitigated here. Now, why is the price not going to hit that and then trade down? It could. Now, we'll dictate that. As long as price already unwinded this area, now once it unwinds and goes up, it'll run it as a form of liquidity. And we can see here where it did, right? Boom, unwind, boom, unwind. So now we can shred up through it as a form of liquidity. Again, shred it up through and through. And we can see that's where price started to give us the reverse, okay? So we go to the 4 hour and how we could have gotten in on the sell and also now essentially entering on the buy side. Even though I do still see the selling, I will tell you why I took this buy. I'm sure most of you can see it clear as day, but we'll cover it in a little bit. But for now, pay attention to that right there, okay? So, and then, right, where our objectives would be for price, which would just simply be unmitigated order block, and then this point of liquidity that is engineered. Perfect. Okay. And then price started to teeter up here. Again, I'll get into that. Now, going into this step, what do we see just simply on the 4 hour? All right. Retracement, mitigation. No black candles at all. Simply bull run. Here, same thing, bull run. Now, here we start to what? The market starts to accumulate. Here, all we had was straight liquidity to run through. Nothing stopping price, right? All just straight bull run. Now, price hit its objective. Notice once it hit its objective, how it pierced through after this point of accumulation. Now here, you can simply see where the market truly starts to shift. There's nothing here because this is simply a point of accumulation. No low, right? No high, no low. Notice how they sweep it here to engineer the move. So this is now that low, that if we take this low, price will now turn bearish. Price comes up from this point. Here we do have that sweep, then we form of liquidity. Okay, comes down, that sweep. Boom. Here, inducement. They sweep up after the inducement and drop down. That's not a perfect structure. That's not even a minor break because there's no low. The minor break would be here. Okay. But notice how after we run this engineered internal liquidity, price comes up, fails to make a new high. Failure swing. When we have failure swings, what do we need to do next? We need to pull liquidity in order to go lower. But again, we have no confirmation here. Break, mitigation, breakdown, still hasn't broken this low. The price mitigates, and before it runs this, notice how it drops and breaks structure. We have now broken internal structure, but we still need to pull liquidity and establish a high before going down. Price comes up, runs internal liquidity and respects the last point of mitigation on this order block. It drops down, inducement, and look where price perfectly ends once we've fully broken out of the structural range, because this is not a liquidity run. Why? It's not an external run, it's not internal because there's no low at all. There's no liquidity point to run because once it broke here, it failed to establish a new high and then establish a new low. And now you just had the inducement on the way up. It runs the inducement here. And this would have been your entry right here on the short. Now, let's say you didn't catch that. Where's your reentry? False order block, unwinds it, boom, taps right there into the valid order block. There's your reentry. Price absolutely melts. Now here was another, right, again, not actual high. So once it takes that for the time being, most smart money traders are trading at this order block. This is now the new high. And you can see again, no structure, nothing. So this is all that inducement to build up to run. And then you can see again, just the reaction. Why? Look, it's on the left. Here, simply just unwind. No, that's not a true high and it's not a true low. Now you could say it's a short-term high here, but there's no low here. There's no low, nothing that was mitigated. So this is the false POI to unwind. No structural break. This is all inducement because here we have internal liquidity. Now, again, false POI never took a valid form of liquidity. Beautiful sweep, like a hot knife through butter. Okay, so now we get into these points. Ultimately looking to run the low, but we do have the points to offline. And this is where people go wrong because a lot of people are looking for buys to retrace into this one. We're in a bearish market now. Here you have the breaker. Okay, breaker wise, this is where the range started before going up, the last candle. Okay, and then you have imbalance. Again, no structure broken. None of these are structure points. Inducement comes down. You have that build up. No structural breaks. So we're not taking this yet. All right. Failed to make it. Comes false mitigation. There's no liquidity here, so it can't run. It has to come under this low anyways. So it builds it up, and where does it hit? Again, imbalance. You have the breaker right there. There's your entry. Comes down. Here you have an inducement. Notice how this melted down with no validation. False push up mitigates the breaker. That's not valid. Why? Because the move up wasn't, and you don't have full imbalance here. You have the break. So again, once we run under this false point, this is why I did scalp that buy. But now I do see sells incoming because we ran here. Once we run above there, I would look to sell this pair. Okay. As for the buys go for today, it's because we now have substance backing it, as here we just had straight imbalance. So as far as the scalp went, you can see how prices reaccumulated to go higher. I didn't take it off a falsified context. I waited for some type of validation, again, just to scalp to this high. Right, so around there, notice how price, right, no structure, the whole leg breaks above this area, sweep down, mitigation comes up, reclaims the order block. And then now we can see how it sweeps, but we still have all these inducement points. The price is very likely to now induce and then drop. Okay, so this is EU. I hope you guys enjoy it, and I'll go ahead and see you in the next video where I'm going to break down AU and GU, tying everything together how I did on this pair from a top-down analysis. Also, we are only trading within the sessions. So now if we go back and look at our entries, we can see what times they were. 10, 9, and 10, New York. Okay. Here, we wouldn't have taken it because it didn't line up. We can see this was after the New York session. Okay. So we wouldn't have taken that. Now let's see here. Here, right here, boom, London open, retracement. I'm down with the venture that on London. Again, New York. London leading into New York. Let's see here. Boom, right there. London open on that retracement. So all the entries are going to line up with our sessions. All right. See you in the next one.